If every country in the world owes money, then who exactly is everyone in debt to? Because think about it. United States owes trillions. China owes trillions. Even the richest nations on earth, Japan, Germany, the UK, all sit on mountains of debt. So if everyone owes someone, then where is the someone who's owed hiding? This is the strange mystery at the center of our modern economy, a system built on promises that can never be fully paid back. And yet somehow, it keeps running. Today, we're going to uncover the hidden architecture of global debt, who really profits from it, who truly holds the power, and what it means for the future of money itself. To understand why every country is in debt, we have to go back centuries to when the idea of money itself changed forever. There was a time when money meant something physical: gold, silver, coins minted with real metal. If you had 10 gold coins, you owned 10 gold coins. Simple as that. But bankers and governments found a clever trick. They realized people didn't actually need to carry the gold itself. They only needed paper notes promising that the gold was safe somewhere. This was the birth of debt-based money, a system where money stopped being a thing you own and became something you owe. Each paper note represented an IOU, and as these IOUs started circulating, money became debt itself. The first central banks, like the Bank of England in 1694, were literally created to lend money to governments. With interest, from that moment, every major war, every empire, and every modern economy that followed was financed not by treasure, but by debt. Fast forward to the 20th century. World War II had devastated economies. Nations were broke, even the victors. So, in 1944, world leaders gathered in a quiet town in New Hampshire, Bretton Woods, to rebuild the global financial system. They created the International Monetary Fund, IMF, and the World Bank, two institutions that would manage international debt and stabilize currencies. The US dollar became the anchor, backed by gold, and every country pegged their currency to the dollar. But then something changed. In 1971, President Richard Nixon made a shocking announcement. He ended the gold standard, meaning dollars were no longer backed by gold at all. Money was now just paper, or worse, just numbers on a screen. From that moment, the world entered a new age, the age of unlimited debt. Governments could print more money to cover expenses. Banks could lend money that didn't even exist. And debt, once a burden, became the fuel of global growth. Here's where the story gets deeper. When governments need money, they issue bonds, promises to repay investors with interest. These investors can be banks, other governments, pension funds, or even you, if you own a government bond. So, technically, countries owe money to investors. But here's the catch. Those investors are also funded by banks. And the biggest banks are funded by central banks, which can create money out of nothing. Short, governments borrow from banks. Banks borrow from central banks. And central banks create money by typing a few numbers into a computer. It's a perfect circle, one that never ends. In this system, money equals debt, and debt equals money. If all debts were paid off tomorrow, the world's money supply would vanish. Now comes the real question. Who's the creditor? Who does every country actually owe? The answer isn't simple, but it is revealing. Let's break it down. Roughly 1/3 of global government debt is owned by foreign governments. For example, Japan and China hold over $2 trillion in US debt. Another 1/3 is held by private institutions, hedge funds, insurance companies, and pension funds. The remaining 1/3 is owed to the country's own central bank, which is basically itself. So, in many ways, nations owe money to their own system. But behind those institutions are a handful of financial giants: BlackRock, Vanguard, JP Morgan, State Street, Goldman Sachs. Together, these firms manage over $25 trillion, more than the GDP of the United States. They own stakes in nearly every major company, every major bank, and every government bond market. So if you ask who the world owes money to, the answer might be chillingly simple. The same few institutions that control the world's money control its debt too. But systems built on endless debt always reach a breaking point. In 2008, the US housing bubble collapsed, triggered by bad loans that banks thought were safe. That crash erased $19 trillion in household wealth and nearly destroyed the global economy. To save it, governments borrowed even more money, trillions, and bailed out the same banks that caused the crisis. The debt didn't disappear. It was just moved from banks to nations. Fast forward to today, and global debt has reached $307 trillion, triple the world's annual economic output. Every second, that number grows by over $1 million. It's a time bomb ticking louder every day. Governments have tried everything, cutting interest rates to near zero, printing more money, creating stimulus packages, even negative interest rates. None of these fix the root problem, they only delay the inevitable, because you can't solve a debt problem. With more debt, every solution is just another layer of the same system, keeping economies afloat by pushing the burden into the future. And in this future, we all become the collateral. Our savings, our pensions, our purchasing power, slowly eroded by inflation and currency manipulation. It's a hidden tax on everyone, for the benefit of a few. Now, as the world shifts toward digital currencies from Bitcoin to central bank digital currencies, CBDCs, the game is evolving again. Digital money promises speed, transparency, and efficiency. Delight. But it also gives central authorities unprecedented control. With one digital switch, they can track every transaction, freeze accounts, or even set expiration dates on your money. It's not just about finance anymore. It's about power, surveillance, and control. And if the same entities that control the world's debt also control the new digital money, then the question isn't just who owns the debt anymore. It's who owns us. Here's what's happening right now. Over 70 countries are on the brink of debt distress. The average American household owes $103,000 in combined debts. For every $1 of growth, the world now takes on $3 of new debt. That's not progress. That's quicksand. And yet the markets keep booming. Why? Because the system rewards debt. The more a country borrows, the more liquidity floods in. The more money is printed, the richer asset holders become. It's not an accident, it's design. So what do we take away from all this? 1. Debt is not a flaw, it's the foundation. Our global economy is built on borrowing. Remove it, and the entire structure collapses. 2. The creditors aren't countries, they're systems. The real owners are central banks, investment giants, and financial institutions that profit from every loan, every bond, and every bailout. 3. The next evolution of debt is digital. Once money goes fully digital, the balance of power won't just be about wealth, it'll be about data and control. So, if every country owes money, and every dollar is born in debt, then maybe the real question isn't who we owe, but how long this illusion can last. Because debt isn't just an economic concept anymore. It's the invisible chain that binds nations, markets, and people together. And the ones holding the keys aren't presidents or parliaments. They're the architects of the financial world, unseen, unelected, but incredibly powerful. The next time you hear about national debt, remember it's not just numbers on a screen. It's a story of control, dependence, and the price of keeping the system alive. If you found this video eye-opening, don't forget to like, subscribe, and share it. Because the more people understand who really owns the world, the closer we get to changing it. Knowledge is power, but only if you use it.